It seems like there's been a steady ramp up of fear articles and videos and news stories over the past few months, but then it just got kind of quiet over the past few weeks. All seemed fine and summer was just starting to hit its stride. And there wasn't really a lot of fear talk heading into the Fed meeting, and we actually talked about the Fed meeting specifically during our weekly live Market Insiders Q&As about what you should expect to hear and what the market's reaction will be based on the various scenarios that could have come out of the Fed meeting. And the Fed meeting on Wednesday went pretty much as planned. Sure, they said inflation was higher than they expected, but they maintained their stance that it was transitory and they should still be looking to increase rates in 2023 as planned. So basically a non-event, and Wall Street reacted accordingly as well. There was no crazy tanking or anything else crazy going on in stocks. So in our Discord, it was pretty much a normal day the next day as we all just continued working on our plans for the upcoming change in stocks later this year. But on YouTube and in my comments section on YouTube, you would think the world was on fire and hyperinflation was coming immediately and a market crash was coming tomorrow.
Shocking news from the Fed.
Hyperinflation is coming.
A lost decade confirmed, and a bunch of other stuff like that was everywhere. Did we miss something? I mean, was there a detail that I completely missed in the Fed speech? I mean, is there something new that I just didn't catch? Well, I looked into it further, and I will give you the truth on what is going on so you have answers to those questions. And that's honestly why you're subscribed to this channel, to get the truth without all the nonsensical BS. And if you aren't subscribed, then just do that and like the video as well, as both of those are free and easy to do. And who doesn't like free and easy? The answer is only really weird people. And I don't mean weird like me, I mean really weird people. So we will address the lost decade here in just a second, as I have been getting asked a ton about that as well. But let's start with the Fed and what actually happened. I thought about making an entire video on this, but I didn't really see the point because I respect your time, and I'm not going to just make up a video to stuff it with ads about something that honestly was rather benign. If you actually looked at the CPI data from the week before and didn't just read the headlines, you would see that it indeed was high, but it was skewed high by items that are clearly transitory. You know, like commodity prices and used car prices. And we've already seen commodity prices starting to finally trend down and come back to earth quickly. And there is no doubt in my mind that when the chip shortage finally lessens soon enough, that we will see used car prices go down significantly as well. And the Fed basically stated just that they still feel inflation was transitory. Now yes, they said it was higher than expected, but it's still transitory and maintain that rates would remain steady for now. Nothing really out of the ordinary or alarming to say the least. And yes, I watched several of the shocking videos, and well, there was really nothing there that you didn't already know. It's just more noise that you need to just ignore. But what about the lost decade? I mean, we're not talking about YouTubers saying this. We're talking about guys like Ray Dalio and Charlie Munger talking about a lost decade. Okay, well, we will look at those two specifically, and I will give you the truth on both. So first, let's talk about Ray Dalio since he's easy. Wait, not that kind of easy. It's just the fact that his stance is easy to explain.
But Luke, he is a billionaire and you aren't. So why listen to you?
Well, honestly, you don't have to. But I think his wealth is a perfect example of why investing is so awesome. That's because there's so many ways for everyone to get wealthy. You can get wealthy buying and holding stocks, trading stocks, or even shorting stocks. You can get wealthy in currency trading and all kinds of other instruments like that. Only in the stock market can one person bet against stocks and another bet on stocks and both come out winners. And the reality is, Ray focuses on currency and fixed income, which is way different from making money than stocks do. He also views stocks as a total asset class, not as individual stocks. So he views the market from a completely different lens than other people do because of that. Ray Dalio's goals and strategy is completely different from Warren Buffett, for example. So even though Ray Dalio's performance over the past 30 years has beaten the overall market consistently, when you look at his performance versus Berkshire Hathaway and Warren Buffett, although his performance honestly is less volatile, Warren blows him out of the water in terms of total returns. And that is because Warren picks individual stocks, not all the stocks. So even if Ray is right and stocks overall are slow growing for the next decade or even don't gain at all, there will be lots of opportunities to buy individual stocks that will perform much better than the overall market and not really be involved in the, lost decade if there is one. That is why I personally believe in picking individual stocks, and that's what we teach on this channel. And speaking of Warren Buffett and Berkshire Hathaway, There was also a lot of noise around Charlie Munger and his thoughts on the lost decade. And Charlie Munger is Warren Buffett's right-hand man there at Berkshire. So I watched those videos on Charlie Munger saying a lost decade was coming or something like that. And within the first few minutes of every video, there was already a major problem that I identified. And yes, I made sure I watched the whole video just to make sure. And that problem is that Charlie Munger only said real returns will be lower than the previous decade. He said nothing about there being a lost decade. And for reference, the previous decade started during the financial crisis aftermath, and we are now sitting close to all-time highs. So the return during that time was around 400%, and that is one of the best returns over a decade in the history of the stock market. So it would make perfect sense for your returns to be lower, even if the market just returns to normal and only returns 200 to 250% over the course of a decade. Even if it only doubles over the next decade, that is not a lost decade. I hate to tell you, but someone saying returns won't be as good over the next decade as it was this previous decade that was incredible does not imply a lost decade. This is why critical thinking is so important when you are watching these videos and reading these articles. Unless there is something significant that changes the current trajectory of the economy and inflation, we are on track. And when you see talk like this, you need to realize a news cycle doesn't stop because things are getting back to normal. They have to drive clicks. I have to drive clicks too, if I'm being perfectly honest, so you have to cut through the noise. Don't let the noise influence your plan for the coming market changes as we get closer to seeing inflation flatten out and the Fed stance starts to shift to tapering and eventually raising rates. Now is the time to plan for that, so stay above the noise and start preparing now so you are ready to make money when it happens. And if you don't have a defined plan for all your stocks, or you don't know how to create a plan or value a stock, we can help you with your planning as there is a course in the Market Insiders private group dedicated to that, along with creating an infinite money loop and other courses available as well, along with live weekly Q&As where you can ask me basically anything, a great Discord group, tons of exclusive videos, downloads, and more, all for the price of a meal at McDonald's. And yeah, McDonald's has gotten expensive, guys. So check that out. It's the first link in the description. So thanks for watching, and we'll see you in the next one.